Good morning, good morning, good morning. Welcome to Market Wake Up. My name's Jordan. This is John, and you're watching the one-stop shop to get you up to date with everything you need to know to start your trading day. We're going to break down the macro mumbo jumbo so you don't have to worry about it. You can just trade it. John, I hope you're having a fantastic day. Everyone in chat, make sure you give us a wave and let us know where you're from. We're going to have a little bit of a talk about the Great British Pound today, which is going to be an exciting one. So without further ado, let's get into the Market Wake Up. Good morning, John.
Good morning, Jordan. Or good afternoon, Jordan, I should say, sorry.
It is good afternoon, but how you doing?
Yeah, I'm doing good, man. I'm doing good. I feel like, again, it's been one of those weeks that I feel like it's been a long week.
It's Wednesday. It's Wednesday.
And it just feels like, why is it not Friday yet? Come on.
Jeez, I feel like I'm in next week already. Like I'm on Thursday next week. Like I don't know what it is. I don't know. Maybe it's the clock's changing. Yeah. Maybe it's the clocks changing that's just thrown at least myself out of whack. My clocks haven't even changed, right? But the team around me's clocks have changed. So it's but is anyone else? Let us know.
Clocks change in Australia? Do they change?
Eastern states, yes.
Oh, okay.
So the eastern states do daylight savings. The western, I'm going to say the western states, but it's just one. The western state, West Australia, does not.
Oh, okay. Interesting.
Yeah.
Interesting.
Yeah. Which this is the first time I've lived in a place that doesn't do daylight savings.
Oh.
And I love it.
Yeah.
They love it. It's so much easier. It's just easy, so much better. Now, the downside is the sun's up at 5 a.m., right? But we're also in the desert, so the sun doesn't set till like 7:30, 8 o'clock anyway. So we still get all the daylight. I don't have to worry about changing the clocks and working with international, especially in trading, when you've got the different stock markets change, like their opening times change because of daylight savings. Simple.
Yeah,
simple here. It's just easy. It's just easy, and it is nice. But guys, I'm still waiting to hear from you. Let us know where you're tuning in from. Make sure you say good day this morning. Has anything caught your mind this morning, John? Caught your eye as you're looking across the markets?
No. Well, obviously there was some Australian data out overnight, and the Australian dollar has been a big play for me over these past 3 or 4 weeks. Been very heavily looking for shorts across the board. We've actually seen a little bit of an uptick on the Australian dollar today. CPI came in lower than expected, actually. So we saw quarter on quarter coming at 0.2%, year on year down to 2.1. The only one that we saw that might have lifted it a little bit was the trimmed CPI came in at 0.9%. So that was revised higher. And so that's probably where we're seeing the support coming in for the Australian dollar at the moment. The trim CPI has not really gone down. So that's what you'd almost want to see, because it's basically telling us that in the main sort of CPI, your energy and your food costs are probably the ones that are being the big driver. I haven't dived into it, so that I'm just guessing on that front. Whereas obviously trimmed is more like your core CPI. So essentially the Australian dollar's had a little bit of an uptick from that. It'd be interesting to see if this changes anything. I don't think it necessarily does when it comes to Australia. I mean, we kind of touched upon it yesterday with the RBA, and are the RBA in a position to cut rates? I mean, headline figures, you're getting there, right? You're at the 2.1, you know that's in a decent point, but is the headline figure what they're really focused on at the moment? That's
the thing, because the RBA are a bunch of stubborn. I don't know if I can continue what I was going to say here, but they're stubborn, right? They're stubborn. Yeah. Good morning, Paul. Good morning. Welcome in.
Morning.
And it is it is an interesting situation to be put in, because much like against the average of all central banks, who are the guys controlling each economy and the monetary policy, which is this thing called interest rate, which we keep talking about. The RBA were probably one of the only ones leaning back towards the maybe even hike again, and hold them steady. Now CPI coming down doesn't back up that idea of hiking again, but I don't, and I think you're alerting to the same thing. I don't necessarily think it hints towards cut. If anything, it does lean that direction, but
Yeah.
I don't think it's a hey, let's do this. We're not forecasted to cut till March 2025, and even then, it's 25 basis points. And this does support that for March 2025. Does it bring it any closer? I struggle to see a world where that is the case. That obviously the concerning factor is when we really feel the Chinese slowdown be felt across here, and that starts taking into effect. Obviously, the RBA don't want to be hiking into poor business conditions because it's just going to be a shit show. But yeah, I don't think it necessarily gives any more clarity, which is disappointing because I was hoping this would give an essence. Actually, sorry, that's a lie. I do think it gives more clarity. Yeah. We're not moving. I think it gives more clarity on the fact that we're sitting steady, which doesn't give me more clarity on a direction to trade the Australian dollar.
Yeah, I mean, the only reason I've been short the Australian dollar is because of the hedge fund positioning and whatnot. There was heavy. I think there was also a mispricing again, and this is where I think when you see big moves in a market and you think, God, why weren't I on the back of that? Right. I think that's because
every currency pair at the moment.
yeah. That's true. Yeah. But I think it's largely down to the fact that you can't, you feel like it's unpredictable, right? Or as a retail trader, you're looking at certain technicals and things like that. Whereas from a macro outlook, it was like, well, actually, a lot of these have been mispriced, right? The great example was the US dollar, right? It was dropping, and we were both just like, "There's no way that this should be like that because of certain economic factors." And then they changed, and it's skyrocketed to the upside. And I think a lot of retail traders would have been caught on the wrong side of that, thinking that dollar's bearish, I'm going to get short. It was a very similar situation, really, with the Australian dollar. That was getting bought up aggressively. One, the dollar was getting a lot weaker, so it was doing well against that, but also on the expectations that China were going to bring the bazooka and bring the stimulus, and they didn't, and that really disappointed. So there was the mispricing there of that, and that's why that's unraveled. And again, as well, it was shown up in the community trader reports, and we saw that big turn. So it's almost, I'm almost in a similar light with the Australian dollar at the minute, because if we look at it from a macro point of view, it's not that bad. It's not that bad. And the Australian dollar is getting hammered because of China. When China flipped the switch, then I feel like the Australian dollar is going to go for a real rampant move.
Someone's pointing a gun at China, and they've gone that way and accidentally shot Australia, and we're like, "What? Hang on, why are we getting shot?" Right? That's kind of how it feels. But no, it does make sense. If it's your first time tuning into Market Wake Up, or maybe looking at macro, right? What we attempt to do here, and this is something I explained yesterday in a meeting, which stuck with me, so I want to explain, is the technicals will show you what has happened, right? You can kind of get that. When you look at macro and you want to trade macro, it changes your mindset of betting on probabilities. Now, in technicals, you still bet on probabilities, but because it's so simplified and it's so easy to recognize, people forget that you're betting on a percentage that this is going to work out. And a lot of people fail to work out what that actual percentage is when they bet. They just assume and hope for the best. When it comes to macro trading, well, we can actually quantify what that percentage might be based on historical data and based on market perception. And one of the biggest edges or biggest money-making opportunities when trading macro, which has been so many over the past 6 months, are when you can identify a disconnect between what investors are currently doing and what's actually happening in economics. And this is a key example of that. The Aussie dollar, the US dollar, the Japanese yen trade not too long ago, the euro, the Swiss franc. There has been just a long line of mispricing. 2024, I can honestly say, the bottom of my heart, is the biggest year of mispricing I have ever been involved in, both from investors who are actually putting the money in the market, and analysts whose job is to predict economic output. They have both been incredibly wrong. Like if I could bet on that percentage on how well people were going to get it right, I think we would have made a lot more money this year, John.
Yeah, no,
honestly. And
funny you say that. Just to add that, I saw a guy yesterday, and he basically faded every bank analysis for this year,
and he
outperformed the S&P by
yeah.
10%.
I'm not surprised. I'm not surprised. It honestly, it has been remarkable, because even things like, your everyday forex trader will use things like FX calendar, trading economics. I read some of their forecasts, even for today, moving into the next few months. I read some of their forecasts, and I just think, where have you pulled this from? Like, I don't understand where you're getting this data, because the analysis doesn't point anywhere. People, big analysts, big firms were coming out saying the RBA was going to cut 6 times in 2024. We spoke at the beginning of the year saying, how on earth is that ever going to happen? That's not a thing. Like, I'm aiming to go 2024 without cuts. I thought, to be fair, I thought the US was going to go 2024 without cuts. We were close. We were very close. But long story short, what I'm alluding to is, when you walk into this macro world, it's about catching people off guard, and it's about having a look at where the market is pricing and figuring out if there's a disconnect. And that's where technicals can't do that, because the technicals only show you where the market is pricing. Surprise factors will catch you off guard just as much as every other investor, which is mispricing. And what we do, and what John and I do specifically, is look for those opportunities where there's a disconnect between what investors are doing and what the macro suggests should be happening. And that's the beauty in that, both in the US dollar recently. Obviously, we caught that. Silver from 28s up into the 30s. We caught that as well. The Aussie dollar you're talking about, and the one that I'm looking at the moment, the S&P 500, I still think is mispriced.
Yeah, no, I fully agree with that. It's just the problem is the saying is, markets can stay irrational longer than you can stay solvent, right?
Yeah.
So that's the hard part about just macro, and this is why we're not just macro. Let's just get that out there as well. I am very heavy technical, but I back it up. I have to have a reason why to be in a market. Okay, so I don't just look at a technical chart and go, oh, that's in a bullish trend, I'm going to trade the trend, right? That's not how I do things. I look at it and go, we're in a bullish trend. Why are we in a bullish trend? Okay, what's backing this trend up? If there's not anything that's backing the trend up, I might start to consider, well, okay, is this actually worth this? Is this trend mispriced? Maybe, is this something that, price is not kind of shaping up like how Jordan explained. So we do still try technicals. I do want to put that out there, but that's only our way of consistent entry, right? And I'll talk a little bit about this tomorrow. I'll do a little bit of breakdown of sort of how you can trade a sort of cut signal and then how you can put it into a strategy, the strategy that I'll use anyway. And I'll show you a little bit about that tomorrow.
I love that. Yeah, so there's my little rant. But I saw a few new people popping in and giving it a watch. I wanted to give you a bit of a run through on what it is we do and how we do it, because it is very different. And the retail audience, which we are retail traders, and coming from a background of a guy who learned on YouTube to trade, it is very foreign to what most people are used to. And it can be a little bit complex and a little overwhelming at first, but trust me, once you open that door, there's no going back. It is mind-boggling what you learn and what you begin to understand. So at any point, if we say something that doesn't make sense, or we say a figure like CPI and you go, what on earth did he just say? Feel free. We do this live for a reason. Feel free to prompt us in chat and ask us a question, and we're more than happy to facilitate. In the meantime, what I'm going to do is send us over to Freshly Squeezed. Now, as you can tell, I'm in the office today. I'm not on the usual setup. That does mean the screen's going to look a little bit different, so bear with me as I try and run through these charts and run through what it is you actually want to see. And these prices, which there actually has been a little bit of movement today, John. So I'm intrigued. Are you ready? I haven't even asked you. Let me prompt you. Can you see it? The VIX.
19.3. I'll get in there first.
It's 19.3. It is. We are at 19.3. We have come down a little bit from yesterday. A bit of a volatile day at the beginning, and then a move off. What I did see, two things actually. I missed some market leftovers. Actually, we could even argue three things. One, Nvidia is now worth more money than Apple.
I did not see that.
Good thing, no? Yep. Two, there was a big fire at the nuclear submarine facility in the UK at BAE Systems.
Did not see that either. What the hell? I mean,
looks like it might have been maybe some protesters or something, but where they're building the new AUKUS class submarines, which are nuclear powered. Big fire's gone up there this morning, so that's an important one to keep your eye on. There is another one, and it's completely slipped my mind, and I'm really upset that it has, because it's a big one, and I'll come back to it. It is one that I
hook.
Oh yeah, that's right. Russia have fined YouTube. They fined Google. They fined Google. Oh yeah, and do you want to know the amount that they fined them?
No. Oh yeah, sorry, yeah, I don't know, but I think do you know?
Yeah, no. Okay. All right, we won't talk about it, John. Let's get into the charts. They fined them. I can't even pronounce. I haven't got that up. It's something like 25 decamillion or something like that. It is more money than there is in circulation in the global economy.
Well, that makes sense then, doesn't it? Whose idea was that?
Riddle me that one. Absolutely impressive. Nevertheless, let's get into it. The VIX is at 19.3. Great guess today. So we did see a little bit of a pull down. Let's run through the indices. The FTSE is down 0.2%. The Nikkei continues its bull run over the past 3 days with the new parliament. So they are seeing 0.7% up today. The XJO is down 0.5. Just still talking about the Australia situation, we are starting to see a bit of a sell-off in the XJO or the Oz 200. The S&P 500 relatively unchanged so far. Coffee is down 1.8%. Very volatile at the moment, coffee, which is a good asset to be trading. Oil is up 0.6%. Gold's up 0.25%. Silver's down 0.9%. And sugar's up 1.36%. Aussie dollar, as John mentioned just before, up about 0.25% so far. The euro's up 0.2%. The pound relatively unchanged. US dollar, Japanese yen, actually probably its flattest day in a little while in terms of pre-market or Asian session trading. So keep your eye on that as we do unfold. Let's get rid of the 30-day trial, shall we? US dollar CAD is relatively unchanged, and US dollar Swiss franc is down 0.1%. Crypto is down 0.5% after its bull run yesterday, and Ethereum is up 1% though, which is an interesting contrast between the Bitcoin and Ethereum charts there.
Like it. I think, one thing that still really stands out to me is the volatility index. How?
In what way?
It's not pricing anything.
It's not doing anything. Do not give up.
Yeah, and that scares me, because that makes me think that it's already there's no real volatility in it, which is crazy because the election is like next week.
Yeah,
and I just think obviously typically what we usually see is the volatility index will rise towards the event. It's just not going anywhere. It's absolutely not going anywhere, and that scares me a little bit, because I'm thinking, well, why the ideas that I had around the VIX and stuff and trade, they're just not happening, which is okay in one sense because I'm not involved. But two, it's just kind of when you think something, when you have the sort of idea and then it's not being shaken out, you've got to be a little bit more vigilant and not try and dive into anything just for the sake of diving into it. But yeah, I'm very interested in the fact that the volatility index is not really kicking off. That tells me that maybe there isn't much volatility to be had in this sense. So
the risk off sentiment moving into the election, because we're both the same.
Yeah.
I don't want to flip. Like, can you call it? Like, what are the betting odds showing? Is it a direct 50-50 at the moment? Because I can't call it.
I feel like Trump is in the lead. at the moment.
Is that because you want to see the volatility, or is that because
No, I just think that he is in the lead. The last time I looked, he was in the lead, and whenever you hear him talk, he says he's in the lead. But I guess he's going to say that.
Yeah, of course, yeah.
He's not going to say that he's behind in the polls, is he? I can't find. Okay, so who's ahead in the national polls? Actually, Harris is up. Take that back. Harris is up right now, 48.1%. Trump 46.7%. Harris is up 1.4, and that was a poll today.
By who and for who?
It was by the Independent, and the source was 538 national polling averages. I've never heard of that before.
Isn't the Independent British? I thought the Independent was British.
Yeah, the Independent is British. They'll talk about this though, because it's one of the biggest events in the.
Yeah,
and it will obviously impact us in some sense, because we probably do a lot of dealings with America in certain way, shape, or form, defense, all that kind of stuff. But this is the average 2024 presidential poll accounting for each poll's recency sample size. Okay, so Harris is just slightly ahead at the moment, which is
coin flip.
And
I'm not willing to bet money on it. I'm not willing. I was actually surprised to see some volatility in cryptocurrency ahead of this, because we know it's someone who's pro crypto and someone who's very negative crypto.
Yeah, you've said that. Bitcoin actually rallied quite aggressively, didn't it?
That's what I mean. I'm quite surprised that the volatility came into it the past few days, just because of the coin flip attempt that we have on our hands. Nevertheless, Shall we digress into my favorite part of the day?
Yeah.
Don't sound too disappointed. Let's get into it. Let's get in to the big bite. What do you got for us, John?
Well, there's a really big event coming in the UK today, and it's largely gone under the radar simply because because of the US elections, right? And that is the budget in the UK. Now, the budget that we're about to receive is by the new Labour government, and the new Labour government obviously came in winning the election. They have not been in power for 14 years, so it's been largely conservative in the UK. It has been for 14 years. We had a change at the top, and now we've got a budget. And the last time we had a budget, I believe, was in 2010 with the Labour government. So it's really interesting at the moment, because the pound has actually been a fairly strong currency. I've actually liked being a buyer of the pound over the last sort of few weeks. And the reason mainly is because the data out of the UK isn't as bad. I think I called it the best of a bad bunch, which was the fact that the Bank of England weren't necessarily doing anything, and they were just holding interest rates. A large part of that is probably because of the budget, right? And they don't really want to make any changes until that budget has come out, because obviously this could affect people's taxes and X, Y, and Z. So and it probably could constrict the amount of money that's flowing within the markets. Now, the last dramatic event, Paul, we're doomed. I guess Paul didn't vote Labour. But yeah, we're doomed. But yeah, essentially, the last time we had sort of a budget that had any kind of uncertainty around it was Liz Truss's budget, right? Now, the difference between... Yeah, so when Liz Truss, let's just bring up a chart. Let's bring up a chart of pound US dollar, and I can kind of just talk about this while it's here, because the big bite today isn't necessarily, I would say, anything very actionable. It might be more just kind of waiting to see what happens and how this kind of plays around with the pricing.
While we just get into this, in the meantime, everyone in chat, I want to know, how do you feel about modern day governments when it comes to budgets? Because I have a very specific opinion on what all governments are really doing at the moment, which I think is a problem. But if you feel they're performing the way that they should, we get upset with governments from time to time, right? But if you feel they're generally performing okay, put a 1 in the chat. no matter which country you're from. If you feel like they're screwing up, put a 2 in the chat. I want to get a bit of a feeling of what you guys see, because I've noticed a very common trend, specifically in the US as well, with the upcoming election, which I'll touch on after this. But in the meantime, just think about this.
Don't get me wrong. I think politicians have a very difficult job. Now, I'm not defending politicians. I'm not saying that I like politicians in any way, shape, or form. But I think that, in my opinion, I don't think they're ever going to get it right or wrong. Right? They could get it very wrong, but they could, they're never going to get it right. Essentially, there's always going to be someone out there that has the opinion that they're rubbish, X, Y, and Z. I just think they're always on the back foot.
Yeah, but I mean the whole system.
Oh, the whole
not
system.
Necessarily one leader, not necessarily like the whole system as a whole, right? All your parties combined, right? Like that. How do we feel?
That's how I feel.
Communism. no, I'm joking. But, sorry, carry on with the big bite, and I'll address what I'm getting to here in a moment.
So Liz Truss obviously came in with her mini budget, and basically everyone was like, "Oh my god, what's going on here?" Now, I don't actually, in hindsight, I don't actually think Liz Truss's budget was that bad.
The bond market did.
Well, the bond market did. Well, that's the reason why she got booted so quickly, right? Because the bond market basically just took off and was like, we don't like this. And cable prices here fell 800 pips in 2 days, right? Which is, you could arguably say, is like a fat finger event, right? Where we had this big drop. We did recover, obviously. She got booted. She lasted less. I think actually they pitted her against the lettuce, and the lettuce won. That's just UK. It's just UK for you. Anyway. Now we're in a much better position now. And actually, we've seen the Labour government kind of follow in the footsteps of some other Conservative budgets, where they've started to just leak out big parts of the budget and what's going to be happening, so that when the budget is released, there's not actually a explosion of fear and a shock, right? And I don't feel like we're going to see a similar impact this time. I don't think we're going to get the budget out and it's going to be like, right, we've got to really sell aggressively. Do I think it's going to be bearish in the future? Well, I think it's going to come down to a couple of different factors, and one of those factors is how it's going to impact people's pockets going forward. What are the taxes? What do they look like? Who's it going to impact the most? Because a lot of the talk is it's going to impact just employed people the most, right? Raising taxes on employed people. They're also going to try and raise taxes on people that own property above certain thresholds and whatnot. So they're obviously trying to recoup some of the debt that's been spent via the Conservative Party, and they're trying to recoup it. So they're doing that by raising taxes. The thing is, though, when taxes are raised, people have less money to spend. And that's when it kind of trickles into what the Bank of England could do, right? So what could the Bank of England do to boost economic growth? They can cut interest rates, right? That's one of the tools that they can use in that sense. Now, when a central bank starts cutting interest rates, or thoughts that they could start cutting interest rates, the currency usually devalues in that sense, right? So this is where we can relate it back to the FX markets and what's going on at the moment. Think about what's going on in the US as well. We're not really seeing any kind of changes there from the Fed. They want to cut, I think, a couple of times more this year, but are they? Don't know. If you look at sort of what's going on in the yields and stuff, it's not looking likely that they're going to cut aggressively anymore. I think that's still very labour market dependent over there. But in the UK, employment's been okay. Growth has been okay. Again, best of the bad bunch. But this Labour budget could change a lot of things. And I think if we do see the taxation comes in that we're expecting, then it could be fairly bearish for the pound right now. I was doing a little bit of seasonal analysis as well. And I was looking at when September and October have been, or October in particular, have been bearish for for pound, and that does typically continue until middle of November. So we're in a really critical point right now for the UK and the pound. We're in this really nice resistance zone. As a technical trader, right, you're looking at this going, I want to be short, because you've broken through this level of support, level of resistance. You're thinking the trend is down, I'm going to be short. What I'm here to tell you is it's not that simple. Okay, it's not that simple, because the budget is coming up and it's going to change policy, and it's going to change policy on both scales, right? Fiscal and monetary. So that's the problem we've got right now. It's why would you, or I would like to know in the chat actually, who trades pound right now? You know, who is anybody involved in pound right now? Because I just don't see the value in it just yet. But I do think if this budget comes out and we see the market overreact, okay? And when I mean overreact, I think if we overreact to the downside, I wouldn't actually mind being a buyer. I wouldn't actually mind being a buyer if
wow.
this market, yeah. Did that shock you?
Yeah.
I wouldn't actually be in mind. It's somewhere down in this 127. I don't actually mind it. Now, when I look at where hedge funds are positioning themselves at the moment, they're more net long right now on the pound at the minute. So I want to be following what those boys are doing. So for me, I think the budget coming in, I think will probably bring a little bit of bearishness in the short term, but I'm looking at maybe rebounds of that fade in that move, you know, vice versa. You know, actually, I think it depends if the market breaks higher and we end up back at the 132s. Do I like it at the 132s? Probably not. You know, I think there's a two-edged sword that you can play with this kind of move that's coming up in the market. But trading below the 1.3s is quite interesting for me. And I've just realised we're over time by 2 minutes, and I've just been chatting.
I've just been letting you go, and I'm assuming chat doesn't mind, so I'm just letting the no.
It's a tough one
I'm
today.
happy. Yeah, I don't know. Now the reason I prompted everyone on that government chat was because most, and we have had a lot of elections and things going through. Everyone, including both Trump and Kamala Harris, they're both promising to just spend, and they're going to fix all your problems by spending more money and spending more money. And now we know, as economists, I think we can be self-proclaimed economists, that spending more money does not help. It doesn't help a little bit. So one thing I do like that you alluded to there is the fact that this budget is hinting at, hey, we're going to up taxes because we're massively in debt and we need to fix it. That's one thing the US haven't been doing. Now, Donald Trump will do that because he'll do it through tariffs. And he wants to fix the debt problem by making every other country in the world pay for it.
Yeah.
Smart decision, right? The problem is there's a lot of governments out there that just want to spend to fix the issues, and it's not going to fix the issues. It's actually going to create more. You know, the leading driver of CPI, government spending. Believe it or not, government spending is a leading driver of CPI. So there's a lot that really flows through there's a lot of moving parts. Nevertheless, we have gone over time. You take it to go today. Really quick, have a look into Rockwell automation. Okay, over the past 20 years, 95% win rate from now to the 29th of November, the whole month of November. Rockwell automation in the New York Stock Exchange, average return of around 6%. Have a look. It's a little bit cheeky. But guys, in the meantime, thank you so much for taking part. Thank you for taking part in chat. Thank you for joining us, having a listen, and really being a part of the community. We'll be back tomorrow to do it all again at 8:30 a.m. British Standard Time. Jon, it's been a pleasure. We'll see you soon.
Bye.